When people are new to trading and investing, they think that all charts are separate from each other and no chart influences another chart. They're all independent. This couldn't be further from the truth. In this video, we're going to look through the S&P 500 and that blue line. That blue line is Bitcoin, and you can see how Bitcoin and the S&P 500 move together. Also, you can see that the Nasdaq moves together, the Russell moves together, and the Dow moves together. If you want to understand what's happening inside markets, pay attention to that blue line. What is that blue line? That blue line is Bitcoin. Let's run the numbers. Hi everyone, I'm Ken from Crypto Trading KS and the inventor of the CTKS method. The CTKS method is all about moving from fear into confidence and profiting in any market condition. To do that, we must think very, very differently. And if you're new, a very warm welcome and welcome back CTKS family. When you just start trading and investing, you'll probably only put money and attention into the charts that you're investing and trading in. But when you learn the CTKS method, you're looking at chart intercorrelation and chart interdependence. And I'm going to show you how that plays out on the S&P 500 and Bitcoin in this video. I'm also going to explain how the different mindset of selling on green and buying on red, and it's so different because people FOMO in and buy on green only to sell on red before they understand how institutions work and trap retail. In the epic words of Yoda, "Young Padawan, you must unlearn what you have learned." Oh, thanks Yoda for turning up. What Yoda is referring to is that you must learn to buy on red because just market movement will turn it around so you can sell on green. And thank you to Yoda. Welcome you are. In the last 24 hours, there's been $164 million worth of liquidations, and the majority have been long liquidations. You can see that here. And what about the past 12 hours? Bitcoin has had some short liquidations. This pushes the price up. CRV, 1,000 sats, Audi. What about the past 4 hours? Ethereum was really oversold, but it's been doing a technical bounce. When something gets really out of love, it's going to come into love really strongly. One thing to be aware of inside financial markets, and here we're looking at Ethereum. Ethereum, all price is really liquidity related. Right at the moment, we have a lot of long positions opened up, and this is in the past 24 hours. When you see this, there's a lot of liquidity from the $2,400 level up to around that $2,580 level. But there's really not much above it. So the longs go below the current price and the shorts above the current price. What typically happens is price is magnetized towards the magnitude of longs or shorts inside the market. That's what you're seeing here. That spiky behavior has been liquidating all the short positions, trying to draw the long positions back into the market. The blue line that we're looking at behind these particular charts is Bitcoin's line. And you can see that Bitcoin's line and the major stock market indices are very highly and tightly correlated together from a directional perspective. You can see that we had a bit of a dip in the S&P 500 followed by a rally. And that's exactly what Bitcoin did. It came down, then it went up. We see the same thing in the Nasdaq, a real cratering followed by an absolute surge. We also see it inside the Dow, inside the Russell 2000, that downward movement followed by the upward movement here. If people say, oh, Bitcoin is just moving and crypto, just moving for crypto-related reasons, they have just missed the plot. All markets are intercorrelated and interconnected. You have to pay a lot of attention to what is happening inside the main markets because Bitcoin tends to feel it now more in line with the major stock market indices. When it comes to intercorrelation and interconnection between charts, looking at the S&P 500 and comparing it to Bitcoin is a really good idea. You can see as the S&P 500 came down, what was happening to Bitcoin at that particular stage. It was coming down. And when the S&P 500 recovered, what was happening to Bitcoin? And Bitcoin is that blue line. It was recovering. You often find this kind of association play out on major capitulation events or major market shocks. Therefore, it's pretty important to understand where could the S&P 500 be going right now. Now, why is that important? Because as you've seen, if the S&P 500 is coming down, it will in all probability be pulling crypto down with it. But if it's going up, in all probability, it will be pulling crypto up with it. Now, why are we looking at Bitcoin? Why don't we look at something else? For example, Solana. Because Solana is impacted by Bitcoin's gravitational pull. Bitcoin is the center of the universe in terms of crypto. How can we possibly tell where the S&P 500 could be going? That's a very, very important question to answer. And we also need to look at Bitcoin because Bitcoin can feel market reactions first because, hey, it trades 24 hours a day. And when it comes to major market indices, they go to sleep. Okay, let's check it out. We need to know structural levels, and we can see that this particular level down here of 51.61 is a quite important level, even as we failed to get above this 53.54 level. We just dropped down to this higher level of structural support. So we can see at the current time, we did a failure here. We didn't even get up to test it. We just dropped down into lower safety nets. And this is a perplexing issue that people face when it comes to trading and investing. Where are the safety nets inside market structure? If you know where they are, you can see where price can come down to, or you can see where price can form a level of structural support and then start to go forward. But we also note that there are a lot of structural resistance levels, and they're reasonably strong above the S&P 500. This favors one of two outcomes. From a positive dimension, we are likely to consolidate like this, or from a negative dimension, we are likely to retrace backwards. You have to be prepared for all scenarios. You just know the price is always moving in a wave. As price comes down, don't panic, don't run. Just step in at structural support levels because that wave-like action just moves in your favor over time. Let's compare the S&P 500 across total crypto market cap. Now, why do we look at this? Because this is literally the entire crypto market. And what do we notice about the S&P 500? It's moving directionally with Bitcoin and all of the crypto market. You can see as the S&P 500 gathers momentum and strength, it's leading the crypto market forward. From yesterday's video, we had so many fantastic comments, and I would like to just compliment Ambassador Al on this comment. Rule 21, follow the price and not the news. The news will have you coming in and out of the market at the wrong times. Al said negative momentum in the news is normally associated with institutional buying. That's a pretty important one. And positive news to institutional selling. Now you know how to read the news. When applying the CTKS method to maximize our profitability and our sanity inside the markets, Art said something terrific. This is why we check out the Tier 1 charts first and then the Tier 2 and Tier 3 charts. Personally, Art starts with Bitcoin and total crypto market cap, and then looks at the US 10-year and the US 2-year along with the DXY. From the cheat sheet, these are in row 1, those particular three. That gives Art a really good starting perspective. And then looking at the majors, the SPX and the NDQ, which is NASDAQ, and then the VIX. Art is totally nailing it. What we look for as traders are discrepancies in the charts when they move out of alignment or when they move into alignment as well. There are always opportunities inside the market. If you can see them, you can take them. And I'd like to thank everybody who watched and commented on yesterday's video. You're awesome people. And if you're new, a very warm welcome to you. If you would like to get the free cheat sheet, just go to CTKSMethod.org and don't forget to sign up to the newsletter, which is coming soon. Just go down, scroll down until you find the cheat sheet. It's here, it's just down a little bit further, and you can get it free here. If you start to understand the cheat sheet, you will gain X-ray vision and preemptive knowledge into what the markets are doing. The key is how to practically apply this. If you are new to trading and investing and you are just saying, oh, I want to buy Solana, or I want to buy Doge, or I want to buy Tesla, what you would likely do is to only focus on that specific chart, whatever you wanted to put money into. And that is an error. It is a major error. But why? That's where you're putting money into. Isn't that the right thing to do? Well, it takes a little while to just understand that when it comes to crypto, Bitcoin and total crypto market cap work in concert together. They work together and they push the little cryptos around like Doge and Sol. Oh, they're bullies. Well, what about something like Apple or something like Tesla? Well, the S&P 500, the Nasdaq, the Dow and the Russell, they're responsible for pushing around those stocks. Oh, they're bullies too. In fact, the heavy hitters are in Tier 1. These Tier 1 charts will push the other charts around. Oh, so bad. As VH said, we're using CTKS principles to see which way price is headed. Is it going up? Is it going down? And where is it going up or down to? It's the next structural level. So when we stack probabilities, we act as institutional and sophisticated investors and traders. And one thing that we always know, price still gets caught at those CTKS structural levels, so it's a great opportunity to get the price at a discount. My focus is to help you to gain an institutional thinking, become an institution of one, and get away from retail thinking, which is always fear-based. Fear and profit are inversely related to each other. If you have high levels of fear, you're going to make high levels of losses. Instead, if you stack probabilities, the more you stack, the more money you will make. To understand structure a little bit better, let's just have a look at Bitcoin. We know in the last video that we saw price come down and it got caught by structural levels. And then we saw across the past couple of days, it's maintained those structural levels. But what are the structural levels? Okay, let's have a look. One thing that we realistically need to know, where are the structural levels inside the charts? Especially those charts that push other charts around. We can see through this level at around 58,700 and also lower levels around 58,530. You notice a couple of tails in on this structural level at 57,900. Now, what does all this mean? When we can't get above a structural resistance line, and that's what these CTKS levels are. They're marked up throughout all of price history. When we can't get above, we're going to the next one below. And if it's got a negative fresh air gap, we could come down pretty harshly, especially when there's not much in between them. But we expect to get captured or potentially turn around at structural support levels. It doesn't mean that we won't go below it, because that is often the case. They're not brick walls, they're kind of like trampolines. But as the trampoline effect comes into effect, we get bounded in between structural resistance and structural support levels. And you know what was occurring inside the market because the S&P 500 did this, as well as the other major indices. Well, what about the news? Shouldn't we be addicted to the news? Well, if you get addicted to the news, you're going to have a lot of sleepless nights. Oh, Ken, what would you know about that? Well, having been inside financial markets for many, many decades, I used to be addicted to the news, as is everyone. But slowly you get away from the news because you realize, just as many people have said, the news is there for the institutions to pick up bargains and then to dump them into the hands of retail. The institutions know all they have to do is put a couple of green candles in and everybody will come running in like zombies to actually bid the price, and that's where they reverse it, but they're always constrained inside structure. And one other thing that tends to happen until you get that institution of one mindset, you tend to only pay any attention at all to the markets when it's green. When it's red, people just run away. This is exactly what the institutions want you to do. They want you to get the hell out of Doge, Doge, as the price is coming down. But they want you to just FOMO back in whenever there are green candles. Both methodologies are set to just destroy you. The death of 1,000 cuts. You've got to invert your thinking. You've got to think, buy on red, sell on green, not the other way around, which is sell on red, buy on green. For example, as people were just becoming more and more confident that the price was coming up, they were starting to buy. And then what did the institutions do? They just dumped all over them. So they sell. And what did the institutions do then? They rallied it back to structural resistance. If you know where the structural resistance is and these levels are rightward looking, that means that you can use them to determine your strategy moving forwards. Let's do a bit of a quick poll. In terms of structure, do you think that the price in the next 24 hours will land on A, B, C, or D? What's the greatest probability? Do you think it will be at A or trading above it? Do you think it will consolidate around B or C? Or do you think it will be D or below? Just pop in whatever letter you feel comfortable with. We never judge inside our community, so if you put a letter in and it's not the correct letter, it doesn't matter. Price is always moving in a wave. Just hang around another half an hour and you'll probably have the right letter. So for example, A would be trading at around 60,600 plus. B would be a consolidation level of 59,600 to 58,650, and D would be below 57,870. And Bitcoin is currently 59,415. Realistically, the only way to get in front of the institutions is to look at structure, and you're going to find it is very, very powerful. And thank you to Perperatum. When you understand the price action is always reacting with CTKS structure, it is a literal game changer, and many thanks to Oscar. Please make sure that you grab the cheat sheet and also subscribe to the newsletter, which will be coming soon. They're both available from CTKSMethod.org, and they're both free. As you get deeper and deeper into the CTKS method, you'll find that literally CTKS structure determines the price waves, both up and also down. Instead of being chaotic, you'll find the price does move in connection with major news events, but it's always moving between structural levels. If you understand this fact, you can prepare for whatever volatility is inside the market. And many thanks to Crypto Brett, what a legend. Keeping positive is vitally important. Too many people just get pushed out of the market when it goes red and pull back into the market when it goes green. When it goes red, that's a perfect buying opportunity. And when it goes green, that's a perfect selling opportunity. Just be dedicated and committed, knowing that you are either winning or learning. We don't blame as a community because that stops our ability to learn. And always know that opportunities in life reset daily. Yesterday is done and dusted. All that matters is right now. Happy Borsog, everybody, and Kate and I will join you in the next video. Bye for now.